Hello everybody. So today I want to cover ARK Invest and the ticker ARKK. Now it's worth mentioning that this ticker actually for the past 10 years beat the Nasdaq about 60% of the time until we had the interest rates being messed up by the Fed. And the interest rate being messed up both ways, right? They were messed up to the upside, and ARK outperformed tremendously, and then they were messed up to the downside, and ARK underperformed, and now we are at the verge of a moment where the ARK will be dropped again. And what matters to me is not so much that they drop, but rather that they stop changing randomly. I think there shouldn't be a changing price of money. I think the price of money should be the same over a very long run. The 10 years we've had between 2010 and 2020, they were good years because the price of money was not changing. And the situation we're in my view, the price of money is going to have to be zero and it's going to have to remain zero. And the main advantage of that is not that the price of money is zero. Main advantage is that the price of money does not fluctuate randomly. And that's why I think ARKK is a stock that will beat the Nasdaq again as soon as we get back to a more normal monetary environment. And I think it's nice to see the top 10 stocks, the top 10 convictions that Cathie Wood has for her main ETF. So let's go, and I'm going to run it from my spreadsheet and for valuation, and we'll talk a little bit about each of these companies. So first of all, we begin with Tesla. She owns, almost 14.4% of Tesla. Tesla is her number one conviction. Of course, if you look at ARKW, which is an ETF I own, ARKW, she has a Bitcoin as an equally similar conviction to Tesla. But anyways, Tesla, of course, on my enterprise value over gross profit, over revenue growth metric does not look good because analysts are very negative on this company and they're only saying they're going to grow 13%. Now, the growth at Tesla is not linear. It goes through cycles, it goes through phases, and I have no doubt that there will be years where Tesla's revenue growth will be much higher than that, between 60 and 80%. Will we have a year like that? Maybe in 27, maybe in 29, maybe in 31. This is not speculation. This is based on the many multi-trillion-dollar projects that they have stacked up and that are going to be deployed at some point. So this company, using the analyst next 12 months revenue growth, to me, it makes very little sense, but this is why it looks very ugly in my spreadsheet as a 3.2. If you buy it for the auto business, if you listen to analysts on the auto business, and if Tesla is just an auto company, that company doesn't look that interesting. Of course, it's much more than that. The automobile is the least interesting part of this company, if you ask me. Rule of 40 is not there, of course, but that's because of the analyst's number here at 13% revenue growth. Let me move on to Roku. So Roku is another heavily debated stock that Cathie Wood has. Roku is essentially the operating system of the television, and we are still trying to figure out what the role of TV is going to be in the next 10 years. Is it going to be as prominent as it used to be? You know, Roku just seems to be the app on which Netflix and on which Amazon Prime is installed. And so they get a cut of that. But, you know, Roku is competing against big companies. It's competing against Apple. It's competing against Android TV. So the point is, Roku is a company that I think many of us don't understand. It's an advertising play, so advertising is down too. They had a partnership recently with a trade desk, so we'll have to see how big the advertising is. In my spreadsheet, it doesn't look too cheap. This is not a stock that I would buy direct, but I may be missing something here. It's not the worst stock either, right? It's not slated for bankruptcy. It's not like a minus 30% EBITDA, just like the next stock, which I must say I am probably missing something on that one. Roblox Revenue growth is nice at 20%. That's nice. It's the leading video game, one of the leading video game in the younger generation, right? The teenagers of the world. And they also, like Fortnite, I would argue Fortnite and Roblox are the two main, young players, quote unquote, plays out there. And I do not understand what is going on with that EBITDA margin. This is a company that is still losing money. The gross margin is not very good, and on my metric, it doesn't do very well. So the only situation where Roblox would be interesting is if Cathie Wood sees something about that stock and sees that stock, growing 80-90% soon in revenue growth, and then you would get back into better numbers elsewhere. But otherwise, right now, I would not see that stock as compelling. So Roku, to me, not interested, but I wouldn't call it uncompelling. I would call it I'm neutral. Roblox, I would not be interested in that one. Neutral on Roku. Tesla, of course, I'm very, very bullish on Tesla. Tesla is my number one position. Now, how about Coinbase? Well, Coinbase I own. Coinbase I am bullish on, and Coinbase, if you look holistically here, it is the company that rates just about the best. Well, you could argue Hood and Coin both score really well. Hood almost achieves a rule of 40. Coinbase, we get a rule of 52. That's high. That's very good. It's predicted to grow only 22% by analysts, and analysts, I don't know how long it will take them to update the crypto thing, but keep in mind it grew revenue almost 80% compared to last year. This is a stock whose growth is closely linked to the health of crypto, and crypto is going into a bull market. 2025 is going to be nuts for crypto. The effect of the halving is going to be felt, and in my view, Coinbase is the leading onboard, right? It's the leading onboard for those Bitcoin ETF. It's the leading layer 2 for Ethereum with Base. They have their hand in anything that touches crypto. So if we move from legacy traditional financial rails to modern crypto rails, this is a company that should benefit extremely, and in my view, that should be the kind of the next Goldman Sachs, like a 2.0 Goldman Sachs, if you want, or a 3.0. Actually, a Web 3.0 Goldman Sachs would probably be the better way to call it. Coinbase. One of the aspects of Coinbase that I find very compelling is USDC. And they own half of the USDC venture of the project, and you may have started seeing pay with USDC at a few businesses. Is that going to be common at more and more businesses, where you'll just be able to pay with USDC as businesses? And are more and more people going to manage their funds just in USDC, just in digital dollars? Is the digital dollar going to be USDC? There's so much uncertainty in all of that field. There's so much uncertainty, but the gross margin is very high at 86%. This is a trading play. The EBITDA margin is excellent at 30%. Again, I think this is a solid company. I own it, but then again, I'm very pro crypto. As you know, I cover Bitcoin all the time on this channel. So, take that with a grain of salt. Two other companies back to back that are very pro crypto. So you can see she doesn't own direct Bitcoin in ARKK, but she has a lot of Bitcoin exposure, right? She's got Coinbase, she's got Square, she's got Hood, right? And to a lesser extent, she has Tesla. Don't forget, Tesla also has a major hodlback of crypto. So anyways, let's talk about Square. Square, or Block, as they call it nowadays. Block is, of course, the payment system, and so many small businesses have the payment terminal from Square. But it's more than that. It's the Cash App. The Cash App is the leading digital wallet. A lot of Gen Z are using the Cash App as their main banking partner. There's more people using the Cash App than there are people banking at JP Morgan. And by a lot, I think it's something like 70 or 80 million people use the Cash App as their main way to interact with their phone, with their digital wallet. Cash App in the US is very popular to pay for, say, contractors, whenever you have get your loan cut, any type of job. Very popular product. And Cash App, of course, has Bitcoin, and it's one of one of the main, I don't want to say the main, but a big way people acquire Bitcoin is through the Cash App. And the Cash App has been an advocate of Bitcoin, and they also have a small HODL bag. So I don't own this company directly because it grows too slow for me at 16%. I'm a growth snob. This is not good enough for me. But again, I wouldn't fault Cathie Wood for owning Cash App. I wouldn't own anybody for owning Cash App. Cathie Wood likely owns Cash App because of the network effects, and she likely owns Roku and Roblox too because of the network effects, which tend to exhibit exponential growth as opposed to a more linear growth. Now moving on to two more stocks that I own, Robinhood and Palantir. So Robinhood and Palantir. So let's begin with Robinhood. Robinhood, I think, we're reaching that 1.5 to 2 years time frame between a quote-unquote scandal and people forgetting about it. Of course, Robinhood, that was the whole GameStop debacle. Okay, there was a movie recently about it. People are soon gonna fully have forgotten about what happened with GameStop. And I think people will just come back because the UI on Robinhood is just too good. The interface is good. The offer is just too good. Transfer your brokerage account, get 1%. Transfer your IRA, get 3%. The match without your employer type of transfer, that's just too good. The 24 hours trading is also excellent. And to my understanding, they're the only ones to offer it, at least so well known, that offers 24-hour trading. Granted, there are still issues with 24-hour trading, right? Like the carry trade, 24-hour trading stopped working during the carry trade. So they got a few things to work out. But this is an innovative company. Let's not forget the first innovation that they did when they forced all of the main broker to drop the $6.95 fee that anybody used to pay when you bought a stock. Who forced them to drop that? Well, that was Robinhood, right? So Robinhood, in my view, they will be a leading broker of the future. They will be a much bigger company than the $13 billion of enterprise value that they are today. Revenue growth is 26%. It may be higher as more and more people transfer. They are actively paying people to transfer to Robinhood, and so money which others put in marketing, they just put it in a transfer bonus. The gross margin is excellent at 86%. So this is a company that's optimized for cash flow with EBITDA margin at 13%. They are optimized for profitability, and they are the cheapest out of all of the stocks that I covered today. Hood is the cheapest at a 0.27, and that's like the level when I buy a stock because it's cheap. That's like the level where I start to get interested. Right, under 0.3 is when I start to get interested. This is interesting to me. I own it. Small position for me, of course. At this point, it's nowhere near a leading position. It should be bigger. I wish it was. Rule of 40 is 39. Moving on to Palantir, another stock that I own. So Palantir, what happened is I was buying it in the 7s and then in the 10s and then a little bit higher, a little more than 10. Of course, it did 3.5x. I can't remember what I sold it at, but I remember when I sold a share of it to recoup my initial investment, and then I said, whatever else I got is what I got. And I'm not selling it. So I'm playing with house money on Palantir. I just got my money that I had put in as an investment. I just got it back, put it somewhere else, and now the rest is just history. And in fact, I've recovered my initial position in terms of amount. So I'm playing with the house money with Palantir, and it of course makes it very easy to keep holding a position when you play with the house money. So it's very highly valued. It's a very rich valuation. It's at a 1.89. Most people know it. I think you'll have a hard time finding someone at Palantir who tells you that traditional metrics, don't say Palantir is expensive. No, traditional metrics will tell you that Palantir is expensive. Palantir is an expensive company. But do they have a product that is special to the point of justifying that that overvaluation? A lot of people think so. A lot of companies think so. A lot of companies are paying quite nice sums of money, and now they are riding the AI curve. So Palantir is very interesting as kind of a stealth AI play. It's also a stealth military play. My first reason for getting into Palantir was the military play. I wanted that as an edge, but I also wanted something that was digital because digital grows faster, right? You're not dealing with bricks and mortar. You're not dealing with, energy as you would be in a traditional defense sector. No, you're dealing with techs, with software, something that can grow much faster. Now, before I go to CRISPR and Intellia, which I'll cover together, let me go to Shopify. Shopify is a stock that I used to briefly own, but then I sold it, same because valuation I didn't find compelling. Like many Canadian stocks, I find them so expensive in terms of valuation. I don't know what it is, kind of like Canadian real estate, really expensive. Canadian stocks, they're always more expensive than US stocks. Go figure, I don't know. Might be a good strategy if you're a US company and you want to increase your valuation, just move to Canada and then you'll see your stock shoot up. I don't know. I find it expensive. I mean, Palantir, of course, the build your own website, right? Build your own e-commerce from the startup to the IPO. They follow you in running your own e-commerce website. That is the business, right? A lot of well-known brands run Shopify in the background. Namely, if you know about Kim Kardashian, one of the Kim Kardashian has a makeup brand, a private makeup brand, billions and billions of sales. It's all operated in the background by Shopify. Figs, which I've covered on my channel before, which is healthcare-oriented clothing, which I thought would do much better than they have done. They are operated by Shopify on the back end, so I don't know what that speaks of Spotify, what that tells you of Shopify. Sorry, Shopify good, Shopify no good. Even the Tesla swag store is operated by Shopify. So Shopify is able to have a lot of scale for big business. It's the website builder for big businesses. It's growing nicely, 23%. It's well above the minimum 15%, which is my threshold to beat the denominator. Gross margin is good at 51%, although it could be better. It's e-commerce. EBIT margin is good. Yeah, the stock is good. It's just expensive, right? They're so much cheaper out there. So it's a no because of that, but I'm neutral. I don't think it's a company that's going anywhere. And then let me cover CRISPR Therapeutics and Intellia. So these companies are very interesting in that the founders of CRISPR, Cas9, Emmanuel Charpentier, and Jennifer Doudna, they both founded their own companies. Charpentier founded CRISPR, and Intellia was founded by Jennifer Doudna. The reason why CRISPR is predicted to grow so fast is because they've got their first DNA drug approved, their gene editing drug, which is the cure. It's a cure of sickle cell disease. And Intellia is working on about 3 drugs that are supposed to become blockbuster drugs. So sickle cell disease, that would be for CRISPR-Cas9. I made a whole video about CRISPR Therapeutics on sickle cell disease. Impacts quite a few people around the world, quite a few people in America. Impacts a lot of people in Saudi Arabia, believe it or not. And it's like one of the big growth area of this business is going to be selling the gene editing to Saudi Arabia. It's a $2 million treatment, one and done. You get treated, and then your sickle cell disease, which is a very debilitating disease, then it's gone. Intellia is working on one of them called hereditary angio something, which is a disease that like leads to growth of tumors inside the body. You can see I'm out of my depth here, but it leads you to grow, to have like big limbs, anyways. Debilitating disease. Intellia is close to getting that addressed also through genetics drug, through this DNA editing drug. So what you do when you go, if you want to know about the disease that these drugs are attacking, is you just go on their website and you just look at their trials. You know, what I'm more excited about if I were to invest in any of these companies, which I haven't moved, even though despite my video on CRISPR, I have not moved on this company, would be even more pervasive disease. And I know many of these companies are working on blood cancers, right? Leukemia type cancers. Now that would be absolutely crazy drugs, but you can see how crazy the revenue growth can get once you get something approved, which is why Cathie Wood owns this stock. CRISPR predicted to grow at 500%, right? That's a 5x in the sales just because they got that blockbuster, you know, cure, quote unquote, right? No health advice, no financial advice, no advice, but they got it approved, and so that is a very powerful business if you can get blockbuster drugs approved like that. I find this sector very risky, but if you own ARK, know that you're exposed to this sector and you're exposed to the potential success of this sector. I'll conclude saying the reason why it's zero on gross margin and zero on EBITDA is because it's way negative. You can't even compute it. These companies are not optimized for any form of profitability just yet. And that's Cathie Wood for you. ARK Invest, usually she invests earlier on in the adoption cycle of companies than the type of stocks I cover on the channel. The types of stock I cover on the channel are later on in their innovation cycle, but they are also, as a result of that, typically more expensive. You know, of course, if you look at, you know, 2.5 billion, 1.4 billion, think about that. A revolution like CRISPR-Cas9, and an unthinkable revolution of DNA editing and curing the worst disease. The market is telling you that incredible revolution is worth less than $4 billion if you add the two companies that were founded by both of these Nobel Prize winners. Do we really think that's true? And of course not. But it's just the market is going to take a long while to realize that. And there's also the issue of getting the insurance companies to reimburse the product. Insurance companies are rushing to exclude that out, and I think that could be a short-term headwind. But anyways, this is ARK Invest for you. I hope you liked the video. This is not investment advice. This is not financial advice. This is just entertainment. Hoping you are entertained. Please like, please subscribe. Thank you for watching and have a wonderful day.